you at our online fundraising roadshow and pitch session. And our today's panel discussion is devoted to fundraising in the era of pandemic. And my name is Nadia Nesterova. I'm also fundraising advisory and business development and LATOKEN and independent director of the board of the National Alternative Investment Management Association and advisor to a number of leading GPs in private equity, real estate, venture capital, and hedge funds. And today I have a number of renowned speakers representing our investors today. Matthew, could you please join with a brief introduction of yourself?
Yes, thank you very much, Nadia. Good to meet you. I'm based here in San Francisco. I have a couple of different things I do. I manage our own family office, Fifth Era. We also have the world's leading blockchain venture fund of funds. So we're LPs in most of the leading blockchain VCs. And then finally, I'm also managing partner of Kretsu Capital, and Kretsu is the most active early stage tech investors here in America. So thank you very much, Nadia, for having me here.
Thank you, Matthew. And William, could you also join us?
Hi, good afternoon, everyone. I'm William Du from Malaysia. Okay, I represent a company called Engineers House and Viva Global. All right, we are a financial services firm. We are in corporate finance, private equity investments, and we just set up a family office in Singapore. Okay, so our primary role is to actually help entrepreneurs and corporates to raise funding. Thank you.
Thank you, William. And Pranav, could you also join us with a brief intro?
Hi, guys. Great to be here and chatting with all of you today. My name is Pranav Marva. I'm based out of Mumbai, India. I run a small family office. Apart from running one of probably the earliest stage incubators in the country, where we basically invest in each of the companies we work with and work very hands-on with them. Having done about, over the last 5 years, very slow and steady, about 30 deals, trying to not necessarily find the next unicorn, but try and build sustainable companies for the Indian ecosystem to begin with.
Thank you so much, Pranav. And Shivang, could you also introduce yourself?
Hi guys, I'm Shivank. I'm based out of New Delhi. I lead investments for a small 100 crore, $15 million fund here based out of India. We invest into early stage ventures, completely sector agnostic, and we invest up from as small as $100,000 to up to $500,000. We have invested across about 8 sectors till now, 13 ventures, and that's pretty much it. Thanks for having me.
Thank you. And Gary, hello? You're muted, Gary.
Okay. Can you hear me now?
Yes.
Okay. My name's Gary Fowler, and I'm a serial entrepreneur and investor. I've done 15 startups. The biggest exit I've been involved with, I was on the original team of Click Software, which we sold for $1.35 billion to Salesforce. My interest is artificial intelligence. I started Eva.ai, which is about a $700 million AI company 4 years ago. I'm looking for the most incredible AI companies in the world that can really make, as Steve Jobs said, a dent in the universe. I also write for Forbes magazine, actively writing for Forbes, and my new book is AI in the Age of Influence.
Thank you, Gary. And Marcos?
Hi, everyone. Thank you very much for your invitation. I'm Marcos Obeso, based in Barcelona, in Spain. I've been involved in the venture capital field during my last 12 years. I started my career in the VC department of the major retail bank in Spain called CaixaBank, where we have under management more than 180 million euros to invest in technology projects. And after that, I created my own small VC firm with a couple of friends that we invest in technology projects like software enterprise, IoT, even sometimes we can invest in B2C projects as well. And that's all. So thank you very much for your invitation.
Thank you. And Manish, you also join us. Please start with a brief intro.
Hi, thanks for inviting. Good to be here. I see a few of the panel already is there. Sorry, I was about a minute or two late. So hi guys, I'm joining from Bangalore, India. And I'm part of a investment house called Trevino Capital. We invest across startups to high growth companies. real estate, as well as normal conservative businesses.
Thank you, Manish. And Noble, could you also introduce yourself and the company?
Hi, my name is Noble Dracone. We're part of Dracone Capital Partners, and we've teamed up with M Accelerator in Los Angeles to come up with M Accelerator Venture Fund. This is my second hedge fund. In the past, I written books on commodities trading and futures and options and ran a $30 million hedge fund. This time around, with the M Accelerator, we decided to have a 300 company mandate. We have about 800 applicants who apply to our accelerator here in Los Angeles every year. So we have a constant source of deal flow. And one of the things that we decided to do is support at least the top 100 every year with pre-seed and seed capital, anywhere from 25 to 50,000 in the first level. So right now we're raising 15 million. We're close to getting that done directly from accredited investors. And then after that, we're going to the family offices to round out another 25 million to, put together a $40 million fund. But every year we're going to support about 100 pre-seed, seed, and pre-series A. And then when they're ready to go to the second level, then we'll go ahead and invest as they head either deeper into their MVP or further along into their reach out to family offices and venture capital. Our focus has been the last several years among the three verticals. Number one, fintech is very much on our mind. So we've been looking at a lot of fintech startups, as well as now with COVID-19 globally. We've been focusing a lot more on essential service companies, as well as augmented reality and virtual reality. We believe that those spaces still hold a lot of promise, and they intersect with both IoT and visual science and AI. So a lot of our energy is focused in those three areas, but we're also open to other projects. At our parent company, Dracone Capital Partners, we invest in real estate, multifamily, apartment buildings, as well as we're going to start looking once again at repurposing commercial space, even in this time. There's opportunity. So I'm happy to be here.
Thank you so much, Noble. And Matthew, the first question to you. So you're a recurrent speaker at LATOKEN and gave a number of masterclasses and keynotes on fundraising currently in the era of pandemic. What would you highlight in terms of specifics in the current environment in terms of fundraising for startups? And what niches would you mention as of your top priorities?
And Nadia, are you asking from the view of the entrepreneur or the investor?
For entrepreneurs.
For the entrepreneurs, obviously it's a difficult time. You're going to need to make your story clear and succinct and get it across virtually, and that's a challenge. The good news is that we always see that when we have recessions, 2001, 2008, many of the startups founded in the depth of the recession go on to be the most successful startups. And there's some good reasons for this. One of them is that there tends to be less competition. Less startups get funding in this time frame. The second is that larger companies are more open to exploring new technologies and new ways of doing business. So especially if you're a B2E, an enterprise-focused company, it can be a good time to launch new technologies and new innovations because the companies themselves are under pressure to find new ways of doing business. And finally, and this is more for the investors, valuations are much lower. And so we are more ready to invest if the valuation is flexible and lower in this time frame. And then the last part of your question, Nadia, was were there any specific areas? And I would say that even terrible as this pandemic is, it has accelerated the adoption curve of many of the technologies that we've been working on for decades. And whether we're talking about digital and electronic commerce, digital payments, virtual ways of doing business, telemedicine, digital education, all of these things are obviously being used by 100% of the connected population today, 5 or 6 billion people. And so all of that means that as an entrepreneur, you're riding on a curve of adoption, the like of which we haven't seen for a long time. And I think we'll look back and we'll say 2020 was the year in which the digital economy spiked up and it didn't come back down. So I think that's sort of the grand story. And then obviously, if you're in life sciences, you're potentially bringing new technologies to bear that are going to help the world population. And that's also a very important thing right now. So I do think it's a good time to be an entrepreneur, but fundraising is hard in this environment.
Thank you so much, Matthew. And Pranav, what's your point in that? So what are your observations in terms of fundraising among startups? And do you have any specific niches and sectors you would like to highlight?
Yeah, so I mean, I can give you a little bit of an India context on ground, because from a family office, we, for example, go from seed to Series A, whereas from an incubator stage, we go sort of pre-seed and sort of very, very early. And there's a huge disparity in the two, at least what we're seeing on ground. Where the opportunity, like Matthew very rightly said, exists for quality entrepreneurs in a time of lower competition to sort of thrive. At the same time, there is a lot of money that needs to be deployed. So from the sort of the Asia and the South Asia context, there's a lot of capital that's sitting ready to be deployed that would have traditionally been deployed. Investors are, like Matthew said, very happy because they're probably investing cheaper. But at the same time, the time horizons of when they can turn those around sort of are up for question. I personally have seen, for example, 2 portfolio companies raise their Series A in between March and April. And a lot of that was due to the trajectory of what the companies had been doing. So for me, I think the education space and the digital education space is a huge area where you have probably one of the largest companies from India, like Byju's, which is now a decacorn at 10 billion, sort of thriving. I'm trying to open up that. And simultaneously, I think the entire sort of sporting and gaming ecosystem is exploding in a manner that probably previously hasn't happened from a South Asia perspective as well. So those are 2 sectors. Education and gaming are 2 sectors which we feel have sort of seen a lot of movement from a product building side, as well as from an investor appetite side.
Thank you, Pranav. And William, so you also work with international investors and investing yourself. So what opportunities would you highlight for different types of investors? What are your observations here?
All right, speaking from Southeast Asia perspective, in particular Malaysia, okay, surprisingly, our startup scene is very active. There's a lot of fundraising on the equity crowdfunding platform. Okay, one of the platform told us they have received over 20 applications in a month. All right, so now they are actually approving, in the process of approving up to 50 new issues over 10 different platforms. And in terms of fundraising, on my own perspective, before COVID, we actually signed a term sheet to raise 25 million US. Okay, the money is supposed to come into Malaysia end of March. Okay, but however, COVID happened, and of course the process was hold on. And we were, both of myself and my partner were wondering whether the investor will still be investing. Okay, but surprisingly, 2 days ago we are in talk with them again via Zoom, and they actually want to invest more. Okay, so we were surprised. So from 25 million US, they were saying that if they allocate 100 million US to us, can we deploy the capital? And of course, we say yes, because there's a lot of education company in Malaysia, and of course, Singapore and Vietnam, where we covered. Actually, there's a lot of opportunity in that sector. So, and I asked them why. Okay, so one common problem that investors face today is there's so many deals, there's so many proposals coming through their inbox, referred by so many persons, so many deal flows, but they are also in a way confused and distracted. Okay, so at the end, they just say that just push away all the noise. Okay, let's focus on 1 or 2 good ones. Okay, I think that's why they intend to increase in their investment budget into our investment. Okay, and in general, Singapore is already recovering because 2 of our deals actually start moving already. Okay, so yes, I think after 3 months or 4 months of lockdown, investors are active again. They want to invest, especially if those fund managers who manage other people's money. If you sit on the cash and you do not invest, investor might call back their money, right? The LPs might say, hey, since you're not doing anything, we want our money back, okay? So I think this is the right time for entrepreneurs to go out and raise money, right? All right, thank you.
I'd love to piggyback on what William said a little bit.
Noble, we somehow don't hear you.
Oh, you can't hear me now? Of course not. Hold on.
Not that good.
Okay. You can't hear me at all, or can you?
No, we don't hear you. Can you try without headphones?
Yeah, I'll try without headphones. Give me a second. Can you hear me any better now, or no?
A bit better, but not that loud.
Okay. All right. So I was going to say I'd like to piggyback on.
Yeah, if you go closer to the microphone, it's much better.
What we noticed is that there's a lot of dry powder among our relationships right now, in which they have mandates to raise capital and have a return on their investment. You know, we're coming into Q3, Q4, and a lot of investors in the family offices that we're talking to are a little bit desperate for returns, and their whole focus now is to find optimal. So on one level, the family offices and the RIAs that we're acquainted with are very much ready to deploy and put capital into different projects. But on the other hand, we also have a whole contingency in which we focus on working with accredited investors in the US. And there's about 12 to 15 million of them who are in search of outlier returns after all the difficulty this first 2 quarters have provided. So we've been finding that we've been easily, between a couple of our platforms, our podcasts that we're putting out, we have a digital magazine, and some of our other efforts to reach out to directly to small or accredited investors who can deploy anywhere from 100,000 to $1 million at a given time, are eagerly looking for projects. And so we're seeing a lot of the platforms here in the States successfully reach out to those accredited investors, and our company's been successfully doing it as well. So I think that the access to capital is frankly, for the right companies, almost easier than ever. So I'd have to say with William, he hit a really good point. It's not so much whether or not you can get access to capital as if you're in the right spheres to make that happen. And once you've stepped into the right spaces, people, a lot of the investors have kind of given up on the outlier opportunities and things that they were starting off before. And now, between education, crypto has come back aggressively, as well as other aspects of all the DLT. This is a space that right now, investors will come on something. Just to give you a good example, we had a project that we've been consulting on and working on, and this is again why we like the essential services. Raised $10 million for a pizza, making pizza oven where people can have pizza. It's coming out of Italy that we've been working with. That is going to continue to raise capital because they have a self-sustained system. People can come and order their pizza. It's no touch, the whole nine. So there's these niche opportunities that this has presented. And as we've all seen, I've gone through at least 3 different recessions through my financial career. Every time someone has survived, even Amazon is a product of the end of Web 1.0. Nobody thought that people would want to buy pet products and toys. E-toys failed, everyone else failed, and Amazon survived to be the core company to provide all those services that initially came out of Web 1.0. So it's a matter of tapping into the gestalt and then just kind of riding along with everyone else.
Thank you, Noble. And Marcus, would you share some recent cases of investments of your own or maybe your peers you would like to highlight in this context? And you're muted.
Sorry, I'm muted. Yeah, if you want, I'm going to explain you some investments that we have made during the last months. But I have to agree with my colleagues that now we have an opportunity invest in the best companies, because I think that they understood that the COVID democratized how you raise money. So it doesn't matter if you are based in Barcelona or in London or in Paris, New York, where else. You can reach every venture capital firm that is right now trying to invest in the best companies, and you can have it with Zoom or every other tool that we have available. So it's a really interesting moment, because the best ones, as they said, have less competition, and as well all the VC firms are really interested in investing there. So it's I think it's quite obvious to see that this moment for some companies are a great moment for them, because they increase their revenues, they perform better during the COVID. A lot of B2C companies perform really well, and as well they find a lot of VC firms that they are really hungry to invest in new ventures. So as you said, I'm gonna explain you 2 cases that we invest in. One is Bird. I don't know if you know the fintech company. It's a payment company, and we invest there because they want to be a neobank, a new bank, everything online. And we have some interesting news that I'm not allowed to explain today, but they perform really well in Barcelona and Madrid, so in Spain, and they have a lot of customers that they want to share money with their friends with an online platform, and as well to manage their finance with an online platform. And another one is a flower e-commerce. I know that it's a really traditional business, that normally when you have to buy some flowers for your friend or your mother or your girlfriend or your boyfriend as well, you go to a retail shop, an offline shop in your neighbor, but they work really well just online. It's called Colvin. It's based in Barcelona, but they have operations around Europe, well, in different countries in Europe, and they increase their revenues so fast during these months, because a lot of people understand that if you want to buy something traditional, you don't have to go offline. You can go online with a better service, better product sometimes, and both companies perform really well during the last few months.
Thank you, Marcus. And Gary, would you also comment from your experience?
Yeah, so let me just say, in the early 2000s, we took a company from Israel to the US. The market crashed in 2000. They said we were not going to be successful with the company. I did an IPO on NASDAQ. The company's Click Software. I was on the original team, named the company as a senior executive. So it wasn't going to happen. It was a bad time. The company was sold 7 months ago for $1.35 billion with a B. So part of it is, having the right grit. Now think about the opportunity today. This entire digital transformation, the things that Marcos just talked about, revenue's always been important. So if you have a revenue generating company, and I focus on AI in our portfolio companies, it is an incredible opportunity. 92% of the companies 5 months ago, 6 months ago, according to McKinsey, were going through a digital transformation. Look where we are today. We're on Zoom for all corners of the world, Malaysia, Los Angeles, Russia, everywhere. We are in a time where our lives are changing, and what we need to do is to adapt, and to adapt quickly. So in my venture studios, we look for incredible AI companies to turbocharge them, put a turbocharger on them, put the best drivers in the world in them, and take them off, because we want more billion-dollar exits. It is a great time if you know how to do it, and you do it quickly.
Thank you, Gary. And Shiva, would you share your portfolio cases maybe, or your observations in terms what emerging opportunities do you have in your early stage investments?
Sure. So I think the thesis has changed a little bit post the COVID scenario. What we have been doing is that we have been not doing any new investments yet. We have been backing our existing portfolio because this is a very tough time for them. And as investors, as and lead investors in some of these portfolio companies, it's our responsibility to back them. So most of the times we have ended up, most of the investments that we have done in the past 3 months is into our existing portfolio companies. Having said that, we have changed our thesis a little bit in a sense where we were sector agnostic earlier. We were investing and looking out to invest in different sectors. Right now, we are concentrating in sectors which have really experienced huge demand post the COVID thing happened. So, for example, gaming, for example, entertainment, education. All these sectors, we see a lot of different companies coming up, especially in India. So yeah, I think we have been concentrating on these three sectors for the past 3 months. We are in the process of evaluating new investments. Having said that, we haven't invested in any of the new companies yet. Preferably, we see that the impact will weaken in the coming quarters, and that's when we look forward to invest into new companies. But the concentration right now is to back existing portfolio companies and help them sail through the troubled times.
Thank you, Shiva. And Manish, what are the key investment criteria for you now during this time? So what would you highlight in terms of that? You're muted.
Yeah. So I agree with most of the speakers that, we are in a changed world. Everything, what was the norm of the day 6 months back, has evolved, and therefore our investment thesis has to evolve accordingly. I also, in part, agree with Shivan that we are looking at those opportunities which have really become very meaningful in terms of large user base and large consumption in the post-COVID era, including everything related to, online content management and online content usage. So one of the speakers was, I think, talking about AI. We do that. We are also very gung-ho on edutech because we feel that. So just in today's paper, there was a very large buyout. I'm missing the name. Would Shivank or the other gentleman from India remember that article? Somebody bought out.
Doubtnut was bought by Byju's.
Yeah, Unacademy. Okay, today's newspaper, Unacademy, bought out Prep Ladder for $50 million.
Right.
And consolidated their education across sectors portfolio, offering right. Portfolio. So these things you will see a lot of. Today, if I remember right, I was under the impression that in the past 3 months, no VC was working. But if you see the deal flow of the last maybe 15, 20 days, every day you get to hear 3, 4, 5 investments, every day. So people have been at work. They have identified those opportunities which are going to make it big. May not be the billion-dollar opportunities the way Gary wants, but they would become big. And that is what we want. So I look at everything from a very different lens. For the last 7 years, I've been in venture capital, I've been in private equity, and now I'm also running an NBFC, which gives loans, makes investments into real estate. So we go right from $1 million, sometimes even lower than $1 million, right up to $50 million in investments across sectors. So obviously, under me, I have my team, which is one team specializes in startups, one in real estate, one in non-real estate, one in infrastructure, and so on and so forth. The point being that every opportunity must be taken as its face value. I do believe that startups would evolve internally itself. So it's excellent that Shivank is, very committed to the companies that he's already invested in, and he's pouring in good money now to make them succeed in the COVID era. I may not fully agree with him. I would rather have them work out ways to survive, because I have seen multiple times in the last 7-8 years that I've been in this industry, founders and entrepreneurs getting spoiled by too much money. I've seen it enough number of times to now be very, very clear that without financial discipline, startups can't survive. They have to keep pivoting, keep rethinking, keep going back to brainstorming, keep going back to boardrooms, get expert panel on board. A lot of startups, I have another negative point. Some of you guys may agree, not. Most of the founders think they are God's gift to mankind. And that is where it is self-defeating. A lot of them feel that whatever they are thinking, whatever they are planning, it's absolute fail-proof. And it will change the world. More often than not, it takes a good, sensible investor to put them on track, make them open to advice. I think sectors are ever dynamic. 1 year back, had we had this panel, we would have talked of very different sectors. Today, we are talking of very different sectors. It's so dynamic, it keeps evolving. But what changes or what doesn't change is the founder's passion and dedication to making his startup succeed with the investor's money, of course. But in that entire framework, financial discipline plays a very important role. I don't know if all of the panel agrees, but that's my take.
Just joining in and adding on for one quick second on that. I agree to a lot, Manish, what you're saying, but in India, honestly, there is a lot of money and not enough good enough investable opportunities. Let me be as blunt in putting it. There are a lot of not quality founders who are raising a lot of capital. So I take a step back and say that for us, fundamentally, the thesis remains on continuing to find good people and then giving them the right kind of ammo to go and execute. And I think the good people, to whatever large an extent, regardless of COVID and the new world order that we live in, have found a way to thrive, regardless of whether they've been able to raise more capital, less capital. And I think that's the true mark of any quality, at least for us early stage investor. But if the founder is shining through, that's all we sort of should focus on.
I agree with Manish.
Interestingly, if I may, I just want to add one point. During the last 4 months of COVID, we have received about 1,000 plus applications, because these were testing times for the entire startup world, right? And I do agree with Pranav. I think 50 to 60% of them were discounted on first sight. There were maybe 300 or 400 we want to consider. So instead of trying to, because now we are living in an online world, instead of trying to communicate one-on-one and get this going, we are in a mood to organize a marathon type session across 3-4 days, somewhere in Bangalore. And for the first time in India, write checks and commit term sheets there and then on the spot. It's still in the planning phase, but I'm sure Pranav and Shivang, I would like to invite, and they can come, participate, see for themselves. We'd love to have co-investors with us. But this is what India needs as of today. A lot of startups just don't get to reach the decision maker. There are too many gatekeepers in most of the VC funds. Angel investors slightly different. So when Pranav was saying that there are not enough opportunities, one of those reasons is also a lot of medium quality opportunities actually don't even reach us. A lot of them got filtered out from our gatekeepers that we have, and so on and so forth. So again, happy to have a contrarian view from everybody on the panel.
Yeah, so I want to say something. I think, from my own perspective, again, we did Click Software out of Israel. took it out before it was in fashion, coming over. David Yang, the billionaire from Russia, is my partner. I've been the CEO and president of Viva, right? A top 10 AI HR tech company. Let me tell you. So what we're talking about is really like a 3.0 opportunity. It's how to take the company global, right? Because there's fundamental things that have to happen. I think Manish and Noble were talking about this directly. Having revenue is a good thing. You know, this is like KISS principle. Keep it simple, stupid, right? You got to have revenue. You got to have a great team. The other thing is you got to have incredible advisors. So what are the kind of things that are simple? I call it the rule of threes. So on my board, I have somebody that's a top security person, because with everybody here today, security is an issue, especially with where we're going with the digital confirmation. So what do? Rick Orloff, the former chief security officer at Apple, is on the board of my company and eBay. It's simple. It's going to come up. He reviews policies. The next situation is you're looking at who is somebody that you would want to have. So Guy Kawasaki's partner, Bill Reichard, who's on Garage Technology Ventures, Stanford MBA, Harvard. He travels around the world, well known. He's on the board. And then I look for a rising star, number 3. So building the company, you know, build the field and they will come. So building the company. And the other challenge that we each have here is how do we go global, right? So getting out, going global, and connecting the dots. I've been doing this stuff for 30 some years, right? My first startup was 21 years old, and I didn't know what the hell I was doing, but it was successful. I made $9 million. I didn't know anything. So, and what I see, I started the first accelerator in Russia at Skolkovo, and I also started the largest private accelerator, corporate private accelerator in the world is GVA. I'm the co-founder. So I can tell you with thousands of companies, these are fundamental problems. And what we have to do together is how do we get out to go global? How do we work together to be able to create these companies? It's almost like a factory approach today, right? Work together, network, build the companies from the outside. So when you look at it, this is a company I want to invest in, have the right kind of CEO on board, have the right kind of COO on board, and have so I see a lot of companies that have had media. I have one right in my portfolio today. It was a mediocre company in terms of the business, but incredible AI technology. That company is now coming out as, again, one of the top 10 in the world in security, IREX. So we need to, you know, we need to build it. You can have a race car and put it on the track, but if you don't have a great driver for Formula One and you don't have a turbocharger, it's still just a race car, right? So let's build the damn thing. And we can do it together, guys. Seriously. I'm doing it now with GSD. By the way, it's Get Shit Done Venture Studios. That's the name of my company. Get Shit. I went to Mark Zuckerberg's office. In the back of his desk, it said Get Shit Done. I thought that's a great, I'm going to call my company Get Shit Done. So you know, we can do it, right?
To go ahead and kind of agree with Gary, you know, one of the things pre-COVID we were making, so my partner at M Accelerator is originally Italian national. His name is Alessandro Mariantoni. And he's a former UCLA professor that set up an iterative design studio as the basis of his accelerator. And so the whole goal is to really help these companies grow with design and the customer experience leading foremost, so the problem solution set makes sense. And so when we intersected, we originally came as part of the accelerator. One of the portfolio companies that I have, WherePlay, is a AR gaming company, which is kind of evolved into an XR gaming company. And when we talked, I fast realized that his model was brilliant because he worked aggressively to bring European founders from Europe and train them in LA anywhere from 2 months to 3 months at a time. Since the last year and a half, we've had strategic relationships with Korea. Venice is building us a sister satellite. We've set up relationships with China pre-COVID. We hope that it doesn't continue. We've had relationships in Singapore. And so we've actually ended up with a global footprint early on, solely because my partner was already there. We brought in I think about 70% of our cohorts are actually foreign founders who have successful businesses locally, who then have come on and attended in the United States what we've been doing. So I think that this was the natural extension that we're already, all of us were going global regardless, because we know that there are founders everywhere that not only need help, but also are already thinking in a global perspective. The reality is that the internet, as we all sit here from about 12 different countries almost, the internet has literally leveled the field in a way that is so dynamic and has been headed this way. So, I think it was Matthew said it earlier, that this was kind of an acceleration of what was inevitable in what was going to happen, that Zoom was already an active part of my life. And before Zoom, I was using Skype in the 90s. So this has become the guarantee for those people in the know. And I think the biggest mistake any of us can make is not joining forces and linking arms, like Gary is saying, and literally creating an infrastructure that is a brain trust, for lack of a better word, but a brain trust of people globally that are working towards one continuous goal. So yeah, I think it's at the end of the day, it was a logical conclusion, and many of us are already there.
Matthew, would you also like to comment on that?
So I'd like to move on to another thought then. So we've all agreed that there's silver linings here and that there's big opportunities in this time frame. But at the same time, I think it's very hard to be an entrepreneur. And I think that the winning entrepreneurs in this environment, especially if they're focused on digitally enabled businesses, they're going to be people that aren't just conceptualizing a good idea, and they're not just able to build it. They have to be able to deploy it at scale. And this is a skill set that most people don't have. It's a skill set around understanding how to capture massive traffic, global traffic, and get people to convert and be sticky and stay with your product. And I've used this analogy in the past, which is if you think about two dimensions, a great product and a lot of traffic, great products with great traffic do really well. Bad products with a lot of traffic sometimes do well too. But bad products with no traffic fail, and they should. And here's the shame, great products with no traffic fail as well. And so the so what of that is you need to know how to get and manage and take advantage of traffic on a global scale. It's a skill set most entrepreneurs, or many entrepreneurs, don't have. And I think it's in great demand. It's hard to find. And so if you're an entrepreneur listening to this, I would say make sure that you have we used to call them growth hackers, but I think it's more sophisticated than that today. It's these people that really know how to manipulate hundreds of millions of records and really drive massive funnel traffic on every stage of whatever the product is that you are bringing to market. And obviously here I'm talking about digital products. I understand that physical products go through different distribution means, though they also get influenced today by this same conversation. So anyhow, I'm throwing that out, Nadia, because I just want to move into, what other advice can we give the entrepreneurs other than it's a great time and it's a great opportunity.
Yeah, Manish, would you like to add a point to that Matthew statement?
Yeah. So obviously I do agree with him, saying that it has to be a successful marriage between the content creation and the content usage. I'll use slightly different terms, but his terms of traffic is more or less the same. You have a great product and you don't have much users or people who want your product. So I think in today's date, for an India perspective, going global is not that much of a important factor or an impetus because India itself is a huge, huge market in terms of consumerism and demand. For Indian startups, going global happens very late stage in life, post Series C, post Series D. But for smaller countries, I think from William is, I think, from a small country. Maybe I think Singapore, William, or Malaysia, I'm not sure. So for countries which are small, there is not much of, consumer interest. There's not a very large populace of usage. They need to look at global opportunities very early in their life. And that is where Matthew's advice comes very handy, that you need those sort of advisors, used to be called growth hackers, but now I think they've specialized beyond that. They would be like called now global advisors and so on and so forth, whatever you may. And they are needed because their consumption and usage within the small domain of the country is not enough. It's not enough to propel them to a large value startup. For India, it's slightly different. I don't know if my other two Indian friends would agree, but over to them.
So sorry, just jumping. I can give you an example of something that, so India, see, obviously the global economy is seeing COVID hit it obviously very, very strongly. But in India, we had recently, I'm not sure if all of you are aware, that 59 apps were banned by the Indian government. And that sort of attacked the status quo in a manner that hasn't necessarily been done previously. And one of our portfolio companies, I mean, we've seen how things changed in a 5-day window where they sort of like the Pinterest for videos in India, where they saw almost 12 million downloads in a 5-day window, and growth that they've absolutely never seen before. So for a company, just to give you context like that, there's so many people looking to build for the Indian ecosystem that if you can actually marry the usage and the want from the consumer with the demand that the market is obviously supplying now. I mean, we're talking of DAUs of more than 5 million, 5.5 million, which in India for a platform like that just doesn't necessarily exist. Even something like Twitter has about 4 million DAUs, Pinterest has about 2 million DAUs. So, I mean, India is definitely huge. You see a lot more B2C companies building for India simply because you understand the variables a lot better.
Makes sense. And just adding it to it, I think I absolutely I agree with Manish what he said. And I think India is third highest in terms of unicorns, and we have about 28 unicorns. And let's just think how many of them are globally present in other markets. We would find like about 70% of them are still in India, and they're still expanding, and they have certain towns, cities still yet to explore. So I think India is a huge market, and as Pranav said as well, I think huge demand and growing demand. We see India growing to levels where we have 1 billion smartphone users in the next 5 years, and I think it will continue to grow. So most of the like the Decacon EdTech company which Pranav was talking about is still present in India and no other country across the world, and still and it's the most valued EdTech company across the world. So I think going global has actually, India as a market has changed the definition. It's and India and China are behaving in the same way, in the sense that in the sense that companies who are unicorns in the same are more pretty much in the country itself. They are not very global, and absolutely agreed with Manish. It absolutely makes sense.
William, would you comment on Malaysia as well?
Malaysia is very interesting. Okay, just before COVID, in the area of fintech and e-commerce, people are still very reluctant to use the contactless card. Remember your Visa Wave card, right? So you can just tap on the machine and the transaction will go through. Malaysians still prefer to press on the keypad. They have to enter their PIN number to feel safe of using an e-wallet. Okay, and most of the e-wallet, they will have 2 layers of security, usually with thumbprint, and they key in again. So this is the usual trend. And wallet spends thousands of dollars to actually do roadshow in shopping malls, in petrol station, in restaurants area to say, hey, download our e-wallet app and we'll give you $5-10, okay, in your wallet. as a credit. Okay, so customer acquisition cost for e-wallet or fintech adoption is very, very high. Okay, but past COVID, everyone use e-wallet now. Everyone use QR code. Everyone use scanner. So the acquisition cost for fintech companies or wallet companies has gone from hundreds to zero because everybody just start to use it. So we have a unicorn. They used to be from Malaysia, but they moved to Singapore because SoftBank actually invested in them and prefer them to be based in Singapore. Okay, before that, they were giving a lot of incentive for customers to choose their app and use their app. But now they have reduced the incentive. Okay, so the customer acquisition cost fell. And during this time, a lot of Malaysian consumer automatically download apps, food apps, grocery apps, and whatsoever apps, okay? And everybody is using mobile phone now to buy their grocery, to buy their stuff. So for Malaysian entrepreneurs, it's good because now you don't have to educate the market how to use your app, okay? They know how to use the wallet now, but it also provides a huge opportunity for banks also to penetrate this market as well. So of course, fintech entrepreneurs are facing a lot of competition as well from the big players. But from the entrepreneur perspective, to start an e-commerce is very, very easy now, okay? But competition is high. Everybody can be their own social influencer. Everybody who dare to just start a Facebook Live can promote their products, okay? They sell fruits, they auction jewelry, some even sell sex toys online, 11 o'clock p.m. every twice a week, okay? So everybody can be a social influencer, can be a key opinion leader of their own, right? So I think this brought down the barriers of everyone now. So in a way, it helps entrepreneur. In a way, it also creates more competition for entrepreneurs. So I think most importantly is how do you stand out among the crowd, and also how do you provide, okay, investor with the right information, okay, and of course the ROI. Right. Thank you.
Thank you. Marcus, would you like to comment as well before we go to the beach session?
About the Barcelona ecosystem, about the Spanish ecosystem, what do you prefer? I think that we have an opportunity in Spain. We have two mainly spots that are performing really well. Barcelona is the fifth city in Europe to create a venture, a company. And Madrid is in the top 10 as well. And I think that we have an interesting ecosystem in Spain because traditionally we only have a dozen of venture capitals during the last 10 years. And finally, after we had reached some unicorns in Spain, as you know, we have Cabify, Globo, and eDreams. We don't have a lot of unicorns, but we start to have our first unicorns. I think that the venture capital field increases really fast, and we have more than 100 venture capital firms in Spain, backed by international investors like the EIF, the European Investment Fund, and other funds that we have, another public funds that we have in Spain as well. And I think nowadays we have a really interesting opportunity in Spain to invest from Spain in international projects. So I think that we have strong ecosystem.
Thank you. And Noble, would you like to give some final comments?
Yeah, I mean, I think that, you know, I like the pivot that Matthew did with the conversation in really looking at how to assist those companies, because it's not just growth hackers that they need to employ, but I think that it also requires that most startups really figure out what their purpose is. I like the idea of unicorns, like we all do, but we've kind of stepped back in our financial modeling to get away from the idea that unicorns are the only way for a high IRR. We believe that there are a significant number of businesses along the entire investment cycle. You know, we've been watching a lot of companies, especially SoftBank and major VCs start to get earlier on into the investment cycle, investing at the pre-seed level, and then driving at least 5 rounds, from Series A to Series E before even thinking about doing an IPO. So if we just fixated on unicorns, I think we'd all kind of lose capital. We started focusing more on how do we increase our IRR based on solid businesses that, as everyone keeps talking, can produce just basic cash flow. And if they can produce basic cash flow along the way, then what that does is it sets us up for getting outlier returns in every level of the series. And so if they never become IPOs and they don't have a major exit, Gary brought up a company, it took 20 years, but before they got their exit and they did get $1 billion, but they're significantly spitting off cash flow all the way up until that point. So it's where we find an intersection in our firm is that we decided a long time ago that the fixation on unicorns, I think, leaves a lot of solid opportunities thrown by the wayside, and it leaves what large, because we're a smaller firm. We're raising 45 million. My last firm was 30 million before, so it's not like we're pushing billions of dollars. So the reality for us is that if we are looking for founders and we're looking to support founders, lifestyle businesses, quote unquote, 25, 100 million are significant returns for us. It's not a matter of whether or not they can become unicorns. It's how do we make them profitable and then cut the fat in what they're doing now. And if they can make the leap later on. And I think those kind of solid companies then have the opportunity, as opportunities arise, to then become unicorns. Then they can bounce based on the circumstances. William had a great point. There was a lot of pushback in fintech. You need domestically, and it wasn't even just in Malaysia. I mean, in the U.S., in which people just didn't trust facial recognition technology, which has still not become ubiquitous. QR codes have been ignored for a long time. In fact, with us being in the visual science and AR space, nobody was interested in being able to look at a symbol and create or have access to. Now it's become the norm. Unfortunately, a lot of companies were lost along the way trying to be so early ahead of the curve, which gives opportunity, but it's also something that I think founders need to pay attention to, that it's great to be innovative and future thinking or futurist, but be very cautious about what it costs to do customer acquisition. There may not be that outlier moment in which your $5 to $10 for customer acquisition will come back to you. So you have to be very, I think Manish said it best, you have to be very focused early on on what your customer acquisition costs are, push for growth, but at the same time, don't waste your time trying to be a unicorn. Just be a really good business, as Gary was saying. And as you're a good business, the rest will flow. And I think that's kind of what I always kind of talk to a lot of, because we have about 200 people who go through our cohorts every year at the accelerator. And that's, everyone's looking for this holy grail of, I'm going to be, the next Mark Zuckerberg or the next, but I think it's oftentimes just be the next best you, right? Be the best company you can be and focus on your problem solution set in a way that is innovative to the customer. At the end of the day, growth hack, and then Matthew talked about it a moment ago, which was so good. He goes, good ideas without traffic flow die. But at the end of the day, it still should be a good idea. You should be interested in helping people when you're in business. And the more people you help, I think a lot of good ideas, no matter how long they take, will find their audience. It may not be the biggest audience, but they will find their audience as you start to create the value proposition. So as a founder, I think most founders really need to focus more so on their value proposition and less so on becoming the next big unicorn. And I think a lot of investors and VCs and need to also kind of help those founders keep things in perspective as well, that a company that is doing cash flow is a good company. It doesn't have to be bigger if it can't get bigger.
If I could just add to what Noble said, we recorded a masterclass, Nadia, here at LATOKEN called Mastering Early Stage Technology Investing. And to Noble's point, the thesis of that, and I'd encourage any entrepreneur to watch it, is that there's two separate ecosystems. There's the VC ecosystem driving after large exits. And there's the angel-backed ecosystem, which is mostly about mid or small-sized exits. And you need to know which one you're in and who you're raising money from and what outcomes they're looking for. And in fact, here in America, we have about 70,000 tech companies a year being backed in the angel ecosystem, but we only have about 8,000 or 9,000 rounds and about 2,000 or 3,000 new companies being backed by VCs each year. And everything that then follows is going to go down a different path. There is a crossover as well. So some angel-backed companies end up being backed by VCs, but it's a lot less than you might imagine. Most angel-backed companies, we're trying to build businesses to sell businesses. So anyhow, there's a much longer exploration of this in that Mastering Early Stage Technology webinar at LATOKEN.
Thank you, Matthew. And now we continue our panel discussion with Christian's pitch session. Hello, Christian. Could you introduce yourself and your project?
Hello. Hi. My name is Christian Kuzmic. I'm living a little bit outside of Vienna in Austria. So that means for me, it's in the middle of the day. For all the gentlemen who just have stood up from bed, well, all the more a merry good morning. I had a lot of inspiration during this talk here, and I must say, and I hope to be a little bit of everything you just mentioned before, like the silver lining and a really good company. So I'm going to present to you now what kind of actually what business are we want to make. I mean, it's really about the business. It's not about being a unicorn. It's about excelling at the product we have, and this is difficult enough. Just let me show you and lead you through the context. I must say the good thing is, and you should be able to see now the screen already. Nadia, can you see the screen?
Yes, sure.
Perfect. What I'm talking about is the first step of our journey, making a super product with human attention in focus. You know, human attention is a pretty scarce resource, and it's also all the more important when you have a lot of automated processes. I'll come to that later. But how did we get to this idea? First of all, I'm a neuroscientist. That is my background. 20 years ago, I started neuroscience. I started it in Vienna and in San Diego. And then I left for consulting because consulting was just a little bit more vibrant. And I went to McKinsey and then to a couple other consultancies. But the idea never left me that we have to measure attention and predict attention in a certain way. And we start with an unfair advantage in esports. Let me guide you through our idea. What our vision is we will empower peak performance in esports, building a pulse watch for the brain or a tool to zone in. To get there, we combine machine vision, we combine neuroscience as background, and data analytics. That means artificial intelligence algorithms that help us to predict how you are thinking, what you are thinking, probably in real time. Why is that important? It's important because we have a missing link in esports as compared to physical sports. In physical sports, you know exactly when you are, I don't know, a football player, it doesn't make any sense to play football all day, 10 hours a day or something like this. You have to go for swimming, you have to go, I don't know, to the gym, you have to do different things, you have to go running. But the thing is, physical athletes have a reliable performance indicator, which esports athletes are lacking. They don't know what their cognitive indicator of being tired, being fatigued, being attentive, having perfect signal detection, having declining reaction time, they don't know all that. They notice it too late. And you know, when you have little kids, you know exactly what happens. Once you notice too late that you're tired, you're getting emotional. And this is exactly what happens as well in esports. And this is where we're starting. And we're starting with esports, and I just tell it in the very beginning, because that's our chance to collect the best data on attention. It's like if you say, I want to invest in automotive, let's start with Formula One, because Formula One has the high competition, high-speed environment, actually, containing everything you will have in the car 20 years later. And the same we have here, actually. So what we want to do is provide this missing link. We have a product that is specializing on high-end augmented reality glasses And we will have a product, and this is what we're developing, a camera, the buff cam, that helps us to analyze and compare data on a software as a service approach. We will provide a feedback to the player, which is very similar to the interface you might find with your pulse watches from Polar or Garmin. And of course, it's also interesting on the media stream to know that, I don't know, player Razer is getting tired in 5 minutes, if that will be allowed. What is our business model? We start with the pro gamers. And with this pro gamers, we start with analytics as a service. That means we are there, we're using the glasses, and we are giving, together with our partners in Korea, we're having POCs in Korea and Denmark, we're giving the first advice to the companies. And then we are automating our process and provide software as a service. And when this moment is here in the esports area, we come to develop our own proprietary hardware. We have to do this because what we are measuring is pupil size, is blink frequency, is the speed of the maximum blink frequency. So it's not trivial. It has to be fast. It's based on images. It's based on angles. So it has to be real time. And that can only work if we have super machine vision before that. We use these data though, and that's the part. I don't look very much like a gamer, I must say, and I'm interested in other industries as well. And here we are. So we are not only in the gaming industry, but it's the perfect start for us. We also are in the physical sports industry with soccer. We go through education marketing, analytics. We are really directing at the automotive industry because this is a huge scaling up potential here. And well, you can see here the Mindset startup. Our tickets start in our rocket from 750,000K. This enables us to build a really good prototype for our esports target group. And in our plans, we will end here at the medical. We will not end here, of course, but we will have one of the real highlights, because what we can do as well is provide information on preclinical symptoms of neurodegenerative diseases, because they're always accompanied by eye movements that are erroneous or strange. Taking all that together, all the industries I've shown you, we can reach a turnover of 50 million euro, which is, well, not exactly the same in dollar, but it's a good number for us, taking together all the markets we have here. We have an exact business plan already worked out, and also a sales plan. This is the team, neuroscience and business from this side here. And with our specialists in artificial intelligence, we have a lead in machine vision, and we have a specialist on artificial intelligence models, who is also based in Taiwan. And this is really good because we are starting, as I said, with esports industry in Korea. And why Korea? Because it's a mature market. It's a great market there. They know what they're investing in. And yeah, that's exactly why we are there. That's our traction. Yeah, we have started. So that's the time to just take hold of this silver lining that we are presenting. And I'm looking forward to your questions, and thanks for your attention.
Thank you, Christian. And Matthew, do you have any feedback, maybe questions?
Well, I don't know this area very well in terms of the hardware components. I know video gaming very well and have been a video game investor for more than 20 years now. What crossed my mind, and it may or may not be relevant, Christian, is if you could find a way to take the value that you are trying to deliver and turn it into some sort of an API where hardware and game manufacturers, engines, and so on can deploy your algorithms and your technologies into whatever they build, then I see you scaling. You could potentially scale much faster because you could become a feature in everyone else's products. Mm-hmm. Whereas as a standalone hardware, embedded hardware solution where I've got to buy your glasses and wear them and go through your whole process, I think probably it's going to end up being quite a small niche type mm-hmm. of a thing where pros, pro esport players and as you say, pro esport coaches, which are both quite small marketplaces, might be the most logical buyers, at least in that space. So anyhow, the point is, I think increasingly the trick is not to confine your opportunity to the customers that you alone can interact with, but to create open APIs that allow your breakthrough to be picked up and used by everyone else in the world, and really scale that way. So it's a thought for you, but obviously, and that may require you to dumb down the algorithms and make them a little bit less complicated. If what's happening right now is you need this very advanced hardware to support your work, maybe there are some proxies that get you, 80% of the bang without needing to use the proprietary hardware. But anyhow, so that was my thought, Nadia.
And that is a wonderful point, because we are developing into the B2C business with our camera, where we should be able to just sell the camera for 450 euro, which is a price that players would pay. And then we have already this algorithm that you mentioned, that we have turned it down, because we can work with the professionals on the one hand, but we work with the typical gamer who is using, like people are using pulse watches, this thing just to get better. That's the one thing. So we are getting into mass with a slightly, let's say, reduced algorithm and complexity. And also the machine vision capability will not be the same of the camera. The second part regarding the API, that is great, because we thought of, we have a ongoing also you see this here with the Korean partner. One of the Korean partners is the Sogang University in Seoul, the Department for Game Design. That's exactly the reason why, because it's interesting, of course, to know exactly what parts of the game have what influence on people. What is interesting for the players, what isn't. What is a good story to tell? What is a boring story to tell? All this can be said. So this is also I'm very thankful that you came to the same idea. So
yes, but now you've forked in two completely different directions, Christian. So be thoughtful about that. I mean, the market for optimizing games built by game developers is going to be a very small market, and it's a very different market than allowing, esport players to optimize their own performance, which is obviously a very large population, because it's every game player who wants to be better. You can try and do both, but they're completely different things. So anyhow, something to think about.
Sure. I guess as we're in the process of doing a lot of different game development in XR, two things that have popped up very aggressively now is a lot of this analytical data being collected, particularly for children. Most of the professional esports players are really not of age, and that's been a big backlash in the industry for the last 2.5 years. I have friends lobbying in Washington, D.C. because of that, because there is no players union for esports, and so they're not protected. And so I'm just curious, how if you go on a global perspective with this, how do you plan to mitigate some of the collection of data for underage youth? Because this is a deep dive in, I guess it's really a deep dive in personal privacy, to be honest. On the one hand, it's enhancing performance, but on the other hand, as you just stated, you're collecting a lot of data as they are watching and playing the game, regardless of whether you fork or not. That data is still available, even if you just sell it. So I'm just kind of curious, how do you plan on mitigating some of the big pushback on generalized collective data gathering at such a minute level, which is really a behavioral? What you're doing is doing behavioral data analytics. You're not really doing something that is passive. You're actually driving for a purpose. So I'm just curious, how do you plan to deal with a lot of the current, backlash that both Facebook and everyone else has been dealing with in trying to drive behavior based on data, particularly in this instance with children, because most of these sports kids are anywhere from 11 to 17. By the time you're 23, you're washed up in esports.
Exactly. Yeah, that's a huge topic for us, and it's a GDPR in Europe is same as in US. It's pretty dense. It's not that bad in Korea, I must say, because we start to work with professional teams, so we have a consent. But with the children, yes. So what do we do? How do we handle this? The thing is, what we don't do with the consumer product is we don't look at the gaze direction. That means we don't know where to look at. we will be able to have a model that allows us to say where the optimum mental set point or mindset point is for them, just by blinks. That is the easiest thing. I also have a patent on this technology to have a pattern of blinks that allows us to detect that in combination with pupil size. But that is something that is not necessarily in relation to the content presented. That means it's something like measuring air temperature. Actually, it's not much of a difference. I know it's very personal and we have to go through this process with a really good advisor. But in the end, the value alone for us is, or for the person is not taking away his picture like you take, I don't know, cardiac data, for instance. This is much worse actually from the impact. Nevertheless, we need the consent. That is pretty much sure. We have one workaround that we are trying to make here. The camera we're going to sell, the buff cam, will have an integrated AI chip. That means the machine vision part and the calculation part will be built in. So if you want to use the internet portal with all the functionalities, with saying, okay, I'm training for some kind of competition, so show me more track of history, show me what kind of training I should do, then you have to consent into us using all the data we can get. But if you say, okay, I just want to use this function to know, am I getting tired? Should I change my tactics in playing? Then everything is processed on the chip and nothing goes out to the internet. That would be one way. Just close it down and say, okay, it is yours. If you just want to have more of it, you get it. But then the deal is we have to use your data. And that is a way that we are thinking of that should be feasible.
Gary, you wanted to comment?
Yeah, absolutely. So a couple of the things. What I would do if it was me, so Matthew's right on target. I mean, I would look at this in a broader way. And I'll give you, for instance, a friend of mine sold Masquerade, which is one of the top selling applications on the App Store, to Facebook for around $100 million. If it was me, I would look for partnerships, because I think about the API, because selling hardware, and I've done that, is really tough and it costs a lot of money. It's capitally intensive and it takes time. So I would figure out what partner would be really interested. And I have 3 ideas for you. So, and I know this because I've dealt with them myself directly. So I would look at Facebook because of Oculus, right? This could be really interesting. And I know how my friend sold it to Zuckerberg, right? With so Masquerade puts these like Iron Man suits on to get more of a deeper customer experience. I would look at Facebook, and I've talked to Google Corporate Development personally. I would talk to them, try to develop a partnership. And then I have another friend of mine, I'll give you his information. Do you know Docomo, which is the largest telecommunication provider in Japan? The CEO, I'll give you his private email address, Takashi Suzuki. I would talk to him. I've talked to him every couple of weeks about AI stuff. They're looking for really cool stuff. I think you're really a lot broader, Christian, than the market you're looking at right now. To me, this e-gamer thing, there's just too many issues. It's this whole idea of, GDPR compliance and collecting, because the data is really where you're going to make the money, right? And it's going to be hard to monetize that with all the rules out there, and you don't want to get on the other side of the law. So I would look at where this can be broadly done. The other thing is, if I was you, the innovation centers for some of the top, so Tesla, General Motors, Volvo, they're located out in Silicon Valley. I would approach them because it's a lot easier to get in and they can help you develop partnerships. And there's like 50 of them out there.
Mm-hmm.
And it's just an easy way. I mean, you want to get to market quickly. I mean, I'm a clinical psychologist too, so I know a little bit about this stuff, not like you, but a little bit. The key is getting it out to market. And you said what, by 2024, $50 million euros in revenue, you don't have a lot of time, right? You got to go faster than that. Get it out to the market, broadly out to the market.
Okay.
Yeah, I think just to piggyback on Matthew and Gary, coming up with the most simplest and most elegant version of this it could be deployed as an app on phones, because there's pure eye fatigue, right? On people, now everyone's utilizing their cell phone devices more so than ever. But I mean, just getting a very simple introduction to it makes it brilliant.
That's an interesting thought, because 10 years ago we tried something with that with an investor. The investor went bankrupt, not because of us, but we just could not scale up the product. And the intention was the same, what you just said, because it's definitely a topic here. And if we can use the iPhone cam, that's perfect, because we don't have to develop something. If we really can use the algorithm with standard programs, perfect.
Yeah, because right now is the time, more so than ever globally. We talked about it earlier, as we all said, that sometimes the idea is too early. And so you're a futurist. But in this instance, everybody is now utilizing their small screen more than ever. And so here you have an instant ability to deploy something that could actually gain traction, and you can even work in a freemium model just to start developing an audience and a database. So I think you've gone the full way, where you went super hyper niche because of your previous experience. But I think it'd probably be good to dust off your old idea more so now than ever, and then do a deployment of that.
Okay.
Thank you. Yeah. Manish, you also wanted to comment?
Yeah, I just wanted to have a quick take from Christian on whether they have done pilots with the multiple age groups, and what was the data collected, and what could you infer from that?
I didn't get the first part. You asked if we have pilots.
Did you run these pilots with multiple age groups? Because I did hear somebody saying that you would have privacy issues, especially with underage players, and you are doing some blink monitoring and pupil size monitoring. Am I right?
Exactly.
So were you able to run enough large sample set of pilots able to deduce the data collected, and what was the inference of the data?
Yeah, what we can see pretty good with our glasses, and I'm going back here. I'm talking about these glasses here, augmented reality glasses. We can measure here in an environment that is constant in terms of lighting. The biggest problem with measuring with a camera, also would be with a camera on a mobile phone as well, is the lighting. So what we did is we used those glasses for our first studies. And what the outcome is, what we can measure is the blink frequency. We have a distribution. We have Gaussian filters. We have a Fourier transformation.
Stop you for a while. Sorry. Yeah. What I wanted to understand is, what was the feedback of the users on whatever you have created?
Yeah.
And how did they rate their experience? See, today, there are enough and more, as most of the panel pointed out, there are enough and more options available in the market. Whatever is the solution you're creating is a step above, right? Somebody wants to improve their skills. It is not for your base skills, but improvement of skills, right? So has the pilot proven that? Did the people who use it give back that sort of feedback?
Exactly.
Because see, it's very nice to, sit in your lab and say, I've created an amazing product for the world. But I would like to hear the other side of it from the people who tried it. What was their feedback, candid feedback?
The feedback is very good, because in the first time they can use it in their training, and the training of esports looks a lot like a laboratory. I'm not the laboratory guy. That's the reason why I left for consulting 20 years ago, So I'm the connection between all this. But what they see is exactly how they behave in certain situations, what their pattern of reaction time is, and how they stand on the wrong place at probably the wrong time. This is the immediate thing that they can see, that they look at the wrong signals, that they are getting worse at hitting the target, that they are most of the time just all over the place rather than centered. And that is something that they see immediately. And that helps a lot for the trainer to take tools from the big library already of shooter trainings in esports. So it has an immediate benefit, what we have as a service here, definitely. And the scalable product, the automated product, should be exactly the same, but for one difference, it should predict what the attention is. And that is doable with our algorithms when we have a big pool of data. That's not...
As of today, the feedback that you told me, how large was the sample set?
It was 10 people in three different competitive disciplines.
Okay. See, most of the other panelists were talking about your backend, hardware, software integration, APIs, algorithms. I wanted to look at this side of the story. It's all great, whatever is at the backend. End product is what the consumer is using.
True.
And 10 people is too small a sample set for any investor to place a decision.
Well, that's exactly the point. We are in the pre-seed phase, and we are having in Korea one of the biggest teams, Genji, which is one of the top 5 teams. And we're having a sample of approximately 10,000 people with the help of our partners. That's exactly what we want to do. But I'm too long an entrepreneur to spend money all alone. This is why we are inviting investors to our round, because we see the potential, especially also in the other industries, not only esports, because many investors say, okay, I have no idea about esports. I don't know what you're saying, but I understand perfectly that it might be an issue to early detect Parkinson in people, because they're using our camera and we know what actually the preclinical signs of Parkinson's are. So this is actually the point, rather than the esports. But esports helps us incredibly fast to gather the best data that you can imagine, because we're having 10 hours per player, we're having 10,000 players, we're having a market of 300 billion amateur players. Just imagine just a fractile of them putting their data into our data pool, into our software as a service, into our algorithms. So that's it actually, and that's the part. It's something that no other sport could provide us.
That is your top-down analysis. Anything on the bottom-up analysis? How difficult would it be for you to scale, and how difficult would it be for a buyer to understand what he's getting and at what cost? Have you analyzed that bit, the commercial bit?
Well, Manish, this is why I tried to fork the conversation earlier on, because supporting professional esport teams with hands-on interaction and hardware, trying to create a product that 350 million Fortnite players can use to make their game success better. It's not the same product. And in fact, starting top down v bottom up might get you into a completely different place. And neither one of them is bad. I mean, if you're the personal coach of Nadal, you can make plenty of money, but you don't scale. Right, you're a coach of a handful of people, whereas if you're going to scale to 350 million people, you have to be embedded in Samsung and Apple and Google and Nintendo and so on, and that's a completely different business. So that's why I wanted to.
That is true, and
thanks, Matthew.
Immediately.
I see there is a. Sorry, somebody's saying something.
Yeah, I'm saying something because I have to comment immediately on that. What we are doing. If you have an electrocardiogram, then it has to be a really good one. If you're the first one who is using Polar, like Polar said, okay, we are the first ones who can take it from just this thingy here on a watch 20 years ago. We are the first ones who measure your heartbeat in ECG quality, like you would find in a hospital. We are actually doing the same, and we are specializing on predicting and measuring it. And then we have a big pool of attention data. And we have corporations, for instance, with one of the biggest suppliers in the car industry, AVL in Austria, who says, okay, we need to know this because we are using it in the car. And then we have the industry from aviation to say, okay, we are having the problem of diminishing attention in our, in our pilots, for instance. And the next thing is we have it in gaming. And the next thing is we have it in medicine. So that means what we are doing is we are providing the best data on attention. That means what is the decline in reaction time? How is signal detection? What is decision making? This is what we're providing. And if someone, if we go to this direction that we say, okay, we're making an API like we do in esports, we are looking for a partner, and we have a partner. We have a strong partner in the automotive industry. We are looking, and we have a strong partner in the gaming industry, because we are not the specialists for esports. We are not the specialists for automotive. We need to understand a lot, but we are the specialists for human attention, mental load, cognitive load, and that is what we're doing. So the business models might look different from branch
I'll just
to branch.
make one closing suggestion before handing over to Pranav. I see he's put a comment here. So my one suggestion, one bit, pivot your product to a attention span, attention capturing product. Don't call it an esports product at all. Applications could be across esports, could be across aviation, could be across automobiles. So actually you should be talking to the Mercedes and the Airbuses and the Boeings of the world, because they are the big guys who will support you at your current stage where you are. Because see, e-gaming is not as large. So it's large industry by money and by numbers. It's not as structured as the automotive and the aviation industries and the medical industry. So doctors who perform very long surgeries need to be very, very attentive for 8 hours, 10 hours. So re-look at the application and then re-pitch your product from an application perspective rather than one vertical that you've chosen to play with now. My thoughts, but obviously you are the founder and you get to decide what to do. And over to Pranav, he had something he wanted to talk to you about.
Yeah, thank you for that. I just see a very interesting commentary here from Noble, sexy topic of the day. We are not focusing on what is the sexy topic of the day. The point is, if you're looking for attention in aviation, you're facing a little bit of a problem also in automotive, because nothing happens. You sit all day in your car and nothing happens. So how to label something in artificial intelligence algorithm if nothing happens? In esports, a zillion things happen in seconds. So for building up a perfect model, that's the best way to do it. So it's not the question of sexy, it's the question of it works like this. It doesn't work any other way.
Well, Christian, I was going to say, the reason why I brought it up and I framed it in that way is that driving is highly active. It's just like playing esports. People are actually focused on the road. And again, there's no need to be defensive. I think it's a great idea. And I'm not knocking it. I think we're in the esports space. The reason why I say it's sexy is because the insurance model, it fits perfectly because it's $1 billion saver for them. Mm-hmm. It's billions saved. That if they can see if people are non-attentive on the road, then people's insurance can go down or go up, particularly in which, I live in California, insurance is everything, right? And so when you have something that is focused on understanding and watching people's eye patterns based on fatigue, attentiveness, tired, whether or not they should pull over to the side of the road, I think that you hit a niche that would throw money at you all day long. That if you're looking for the capital and you want people to support the development, then this is not, I wouldn't push automotive. I would push this more as a requirement with large insurance carriers to include it. Sort of like when they did the breathalyzer for people who are drunk drivers, when they turned around and then forced tracking for kids who are underage, who are new drivers, and they put those in the cars. Those are not things the automotive industry wanted, but became required as a way for people to save money. And I think that there's an opportunity here for you in a very simple vertical in which there's least resistance. It's not that esports is great. It's, Matthew said it, it's multi-billion, dollar industry visually, but there are sometimes outlier quiet businesses which are a lot more successful as an investor that I like to participate in. I buy music royalties and I buy film royalties personally. People don't realize that they're always up for sale and up for grabs, and I acquire them all the time because they produce income. Once streaming became popular, we were already involved in the idea of buying music royalties, and streaming just added extra capital to our back pocket. So it's the same here. You have a very great product that you literally, in partnership with any of the major insurance companies, could force it into the automotive industry as a not only a money-saving measure, but as a life-saving measure. Everyone knows that, and I don't know if you've seen in California, it's don't text and drive, don't do this and drive. Don't. The reality is you would be able to instantly have people be able to put this quote unquote audio, this, especially if you're focusing on hardware, this visual detection system on their dashboard, and they would get a reduction in insurance for adoption. So there's verticals here that have a more ubiquitous application than esports with what you're doing, and have almost an instantaneous driver that if you can partner with any of the major insurance companies to literally subsidize, because William brought it up earlier, acquisition costs. If they had a $20 expense or $30 expense, to know that it would reduce, any actuary would look at it and know that they would reduce, 5% or 2% of the accidents on the road, which would reduce their claims, they would then use an acquisition cost to buy the hardware in order to drive the cost down. So I just think that you've got a great product and you're thinking along a lot of great lines, but I think the simplest, Occam's razor, right? The simplest solutions produce the best results. And I think that you hit the insurance model perfectly.
Christian, this is Gary. Listen, I'm going to send you the email address for State Farm, which is one of the largest insurers, their actual group that does this. It's their venture office. So State Farm Ventures, they're the people you want to contact. I think Noble's got a great idea. And again, I look at this as being broad, but as we're doing customer development, I would reach out to them and find out what they have to say and set up a presentation for them. Okay. So
okay.
you have it right now. That's their exact address. Their email.
Thanks, Gary.
Yeah.
Thank you. And Pranav, William, and Marcus, your final remarks. Yeah.
Just a closing thought. I think summing up what everyone's saying, I think that you got to redirect the narrative just a little bit. I think you sort of like pigeonhole yourself in a situation where you really didn't need to. The problem you're solving with the product you're creating isn't necessarily directly represented through what you pitch. And I think like these guys said, the opportunity is much larger and much, perhaps in certain scenarios, easier to capture than going down the route that you currently are going. That could be potentially a great market, but till the point of being able to deploy in other embedded systems, it may not be the best go-to-market for you at the outset. So yeah, I just think redirecting the narrative in a manner that allows you to be a bit more inclusive and wholesome as an opportunity, which then has a trickle-down effect across verticals, would be a much better way forward.
Okay.
Thank you. And William?
Hi, Christian. I'm not the expert in e-sport, but I observed comments from other speakers. But I think one important point that Manish actually brought up is the 10 samples that you use. I think is just too limited, because you don't want to spend millions of research and resources to develop something that no one needs, right? So. And secondly, I think I remember you mentioned that your product cost is 450 euros per unit, right?
Well, okay, the consumer product will be at this price. That is the price.
So that is the cost that you need to look at, because I have a webcam in front of me. My friend bought it for about $100 from Logitech. I bought it from Shopee, which is an online platform, for 60 ringgit. Okay, $15, and mine is better than the Logitech. It's a China product without a brand. Okay, so you need to watch the cost as well, consumer purchasing power. Okay, so I think you need to speak to more people. Okay, from different age group and different sports. Okay, and also coach, because how does coach use your product? Okay, to observe the players and so on. Okay, and in general on fundraising, I think entrepreneurs need to go all out to raise money. Okay, speak to more people. All right. So I wear different hats. Sometimes I raise money for my own companies, which I have equity stakes. Sometimes I raise money for my own business, or sometimes I represent the buy side. Okay. So I think for entrepreneurs, the best way is to just go out, speak to more investors. Okay. All the speakers here are experienced in their countries and also, of course, their domain expertise. I think the more people you speak to, I think the more ideas you get. But at the end, you have to form your own opinion and your own judgment, because you are the entrepreneur and you are the one who will be driving the company. All right. Thank you very much.
Thank you.
Thank
And
you.
Marcus, also your final remark?
Okay. Well, Christian, thank you very much for your presentation. I think that you have a really interesting product. It reminds me a lot. Well, I share opinions with my colleagues, so I don't want to say the same thing again. But your company reminds me a lot about a company that we have here in Spain that it's called Real Track System. That they close an agreement with the football club. Barcelona Football Club, and they allow the coach to monitorize their players. And what they helps them a lot to increase their revenues is to find this agreement with a well-known brand around the world. And I think that is something that you are trying to do as well. So you are trying to close an agreement with brands that allows you to explain your successful business case. And this is something that I think that you have to do. So keep going, and thank you very much for the presentation.
Thank you.
And Christian, what is the feedback on our today's event from you? Just in a couple of words.
For the presentation before? For the podium?
For the whole event.
For the whole event, yeah. As I said, it was very inspiring. So very much thanks to all the gentlemen. I just see most of all gentlemen to the discussion before, the inspiration, also the market. And thank you very much for the feedback, which I will definitely integrate. I mean, it's always a short time to have half an hour in total with questions and answers to just lay down the whole business case. But if you're interested, just get in touch. We will get in touch. My colleague Alada Tepelea, the investment officer, will get in touch probably with you. So we'd like you to stay informed, because at some point it might be an interesting opportunity for you. It might be now, it might be later, but definitely it will be at some point in time, and not too far away.
Thank you. And Matthew, what's your feedback on this type of events for your own investment process?
Well, so we recorded another masterclass, Nadia, didn't we? Which was called Raising Early Stage Capital. And I'd encourage Christian to look for it. It's on the LATOKEN website. What was your goal for today? I think your goal should simply have been to encourage a few people to enter a conversation with you. Exactly. And get them into due diligence. But I felt, honestly, that you wanted to demonstrate that you had the answers. And that created a little bit more than necessary sort of dialogue and back and forth. And I understand why, passionate entrepreneurs know they're right. But the best way to get investors into due diligence is to wrap your hands around them and guide them into the process, not get into an argument with them. So Nadia, I think that my overall comment would be, we create these master classes to help the entrepreneurs. I think you should encourage the entrepreneurs to watch them before they come on the panel.
Thank you so much. Manish, you also wanted to comment on?
Yeah, some closing comments. It was great to be here. Great to have people from all over the world contributing. I'm also surprised and pleasantly surprised to note that Christian's investment officer is an Indian who has an Indian mobile number. So I definitely look forward to connect, but I still want to reiterate my case. Please look beyond esports. There are multiple industries, multiple verticals who will respond to you much more positively to do a test case. What comes to mind, since you're sitting in Europe, very close to you, approachable by you are the Mercedes and the Audis and the BMWs of the world. Start with that. If you can reach Airbus, reach Boeing. For them, a very high attention span means that many less accidents and therefore that much damage to their branding. I'm not even getting insurance in the picture at all. I'm saying become an OEM. Let it become a standard part of a component of every manufacturing unit. Insurance is the second stage. If they don't agree, then go to the insurer and say, reduce the total number of claims you guys will have if you put this. So I think just you need to sit back, do some very, very wide thinking and see if there's something more that you can come up with. Obviously, these are the two industries that came to my mind. I am sure there are many, many more where a long, good attention span is the need of the R and business. At those, I'm sure the product that you have would be able to latch on to a lot more than just esports.
Yeah.
Thank you.
Are you there, Christian?
I'm there.
Yeah. So another thing you might want to do, a friend of mine's on the board of Magna. Do you know Magna? They're one of the largest contract car manufacturers in the world. They actually, the owner,
Austrian company. Yeah.
Yeah, Austrian. The actual owner lives actually 5 blocks from me here in Palm Beach. Yeah.
Yeah.
So anyhow, I can connect you with one of the board members, Kirk Buckmeyer, who's in Vienna.
Okay.
And if you connect with me on LinkedIn, and I'll give you his private phone number. And I would just, or his, I only have his phone number actually. So in Vienna. So I'll give it to you. And what I would do is call him up and just tell him you talked to me, and just mention his friend from Silicon Valley. And he's on the board of Magna. I don't know if it's going to work with him. I don't know. But the thing is, what you need to do is customer development before that's the main thing, because what you don't want to do is find out you got a great tool that really they love it, but they won't want to pay for it.
Yep.
So I would talk to him. So just send me something on LinkedIn and I'll give you his phone number. I just don't have his email. All I have is his phone number.
Super.
Okay.
Yeah. Thank you all. So you had some time to share the contacts for the further follow-on communication, which you can continue in one-to-ones, of course, to answer all the questions for Christian also to prepare. And dear also, we invite you to join our different types of events, and we'll have an EdTech panel discussion shortly in a couple of hours. So we welcome you to join different formats of interactions, roadshow, speech competitions, keynote masterclasses, and startup leaders clubs. And of course, as Matthew mentioned, please have a look at the masterclasses for early on investment pitching. And this is really helpful to get this straight from investors. Thank you so much. And we wish you all the best for